Guys, everyone are waiting for the inflation numbers to come out later today. And yes, that is going to have a massive effect on Bitcoin. But I just found a couple of charts which I need to show you right now. And these may be even more important than the numbers coming out. This is a lot of stuff that people are not paying attention to, but I really think you should do that right now. And yeah, we're talking about Bitcoin on shorter and on longer time frames, my overall strategy, and much more. So this is going to be an action-packed episode, guys. Make sure to watch it from the beginning until the end if you want an edge in the market. So welcome back, everybody. My name is Cristiano, bringing you cryptocurrency videos every day, teaching you how to make money in this market. If you are new to the channel, then make sure to subscribe and activate the bell right now. And let's get straight into it. And on the 4-hourly time frame, Bitcoin is still going sideways. You can see that we're finding support of the red line here right on the edge of the orange box here. So far so good. We did go down. What is this kind of candle? This is crazy as a candle here. All of this trading just for it to close in the proximity of where it actually opened. But nonetheless, I digress. This is actually good that we are finding support of the red line here. But as I've been saying, I'm expecting Bitcoin to continue to go sideways, and I am expecting it to potentially trend a little bit lower here as well. But my overall stance is still the same. And some people got, upset with my video yesterday where I talked about the production index actually pointing towards more inflation, which would lead to the Fed raising rates and markets going down. Look, my stance is still the same. I think that we have either found the bottom right here on this candle at $25,000, or I believe that we are going to find the bottom in this overall vicinity. And I'm still accumulating Bitcoin. It's only a matter of time, but I think it's going to take a while. We're going to go sideways. We are going to most likely trend a little bit lower, and then we're going to find our bottom. But once the bull market, begins, we are going to, take off. We are not going to look back at these prices ever again. So that's still my general stance. I'm still the biggest Bitcoin bull out there, but short term, just like I've been saying for the last 6, 7, 8 months, we need to be cautious because we are in an environment right now where you could have some pressure on Bitcoin, and so far that has been the case. But if we do see a big move to the downside today, just a reminder that we do have the support level right here on the edge of this wedge here as well. So we got that. Also long term, just like I said, we are still in the vicinity of where we have had massive buying opportunities previously. When we broke down from this red line previously, we went into some nice buying opportunities here after that. Also, this one, you can see that in every cycle we have had a triangle. In every bear cycle, we have this channel trending down. We hit the 200-week moving average here, but nonetheless, this green box or this green channel is the buy zone. You can see that here in the second bear cycle as well, triangle, channel down, hit the 200-week moving average. And in this cycle, same thing, triangle, channel down. The only difference is that we have not yet hit the 200-week moving average. Now, remember, this is going to trend upwards. So with time, if my prediction of us going sideways for a bit longer is true, then this is going to, continue to rise here, which means that we can hit the 200-week moving average without actually going super low in the Bitcoin price. So we can continue to go sideways and kind of have this converge with the price action. So that's my general stance. And you got the S&P 500. You can see that it took a big beating today. And this is, of course, in expectation of what's going to come from the Fed's decision today. Are they going to raise the rates? How much? And what is the way they are going to talk about this? Well, one thing we can be prepared for is this. So the expectation is 8.3%. And if you look at the market right now, 44 or 40, basically 45% believes that the inflation rates reported are actually going to be above expectations. 30% thinks that they are going to be 8.3, which is the expectation, and only 24% believes it's going to be below expectations. So that can be valuable information for you if you are thinking about the market maybe pricing in a higher interest rates and maybe they announce something lower. Now, if you look at the Nasdaq, it also took a big beating today. We are finding ourselves right now at key support for the Nasdaq. And if this breaks down, well, expect, deeper corrections here across the board when it comes to all assets basically. Which brings me to this. So this is actually a comparison between gold and the stock markets entering into a recession. Now, are we going to go into a recession? How long is this going to continue? We don't know. But this is the dot-com bubble. And what you can see here is the interest rates in colors. So this is about like 4% in interest rates, 5%, go up to 6%. And when it's blue, it's lower interest rates, like 3%, 2%, and so on. So what you can see here is that going into the recession, the stock market actually did perform pretty well. And then you have gold here above, did not perform too well. So stock market outperformed gold. But once we hit the recession, you can see that the stock market really did take a beating here as the interest rates were going lower to try to, stimulate the market, of course. But during the recession, gold actually did go up here. So gold did go up, and the stock market went down during the dot-com bubble. And stay with me, guys. This is a important chart because there's a point I want to make here. So let's look at the 2008 financial crisis. You got the same thing. You got the stock market, going up here into the recession. Actually, gold also went up. But then you had a liquidity crisis. Both of these went down. Stock market crashed a lot here. Gold crashed also, but not as much. And then look here. Gold started to, inside of the recession, basically almost midway, gold started to go up while the stock market continued lower for a while. And then the stock market went up once you saw a lot of stimulus and, basically helicopter money being thrown at the markets, of course. Nonetheless, you can see that gold had outperformed the stock market in both of these circumstances. Now, the question is, of course, what is Bitcoin going to do? Because Bitcoin has not really been around in a recession previously. So Bitcoin is right now correlated more to the stock market than to gold. But this is what I hope is going to change here. So if we do enter a longer term bear market, I am hoping that people can, or that Bitcoin can assume the role of digital gold here. I hope that this is going to be the breaking point of when Bitcoin is actually becoming that uncorrelated asset, or not as much correlated as the stock market at least. Because you can see also with gold here, they were correlated a little bit, but then they started to decorrelate here in the dot-com bubble and also a little bit here in the great financial crisis. So hopefully Bitcoin can do the same if we do enter into something like this. So Bitcoin is really the perfect asset. In bull markets, it greatly outperforms the stock markets and other assets, but hopefully also in a prolonged bear market, Bitcoin can hopefully start to decorrelate and start to go up as the rest of the markets are going down. And another thing I want to point out here as well is that 75% of US retailers are eyeing crypto payments. So 75% are expecting to accept crypto or stablecoin payments over the next 2 years. So Bitcoin, crypto is here to stay. And hopefully, like what I said here, if we do enter a prolonged bear market, hopefully Bitcoin can start to decorrelate. What do you think? Let me know down in the comment section. For me, I am trying to make Bitcoin the standard here. Of course, I am dedicating my time to making this happen. So I am very hopeful. I am not stupid. I would not do it if I did not believe that it could actually happen. And guys, if you want to start trading crypto yourself, you are able to claim $4,500 over on Femex and $4,530 over on Bybit. So make sure to take advantage of these offers if you want to claim some nice bonuses. That's what I got for you today, guys. Thank you so much for watching this video, and I will see you in the next one.